In the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. It is August 29th. It's about 10 to 1 Chicago time. It's another episode of CFRN Thursday. And what we do in the next hour is we're going to break down the CFRN indicator set. We're going to go over the trading methodology. So let me get everything in full view here. Number one, we're going to break down the rules. Okay, so if you're brand new, this is going to be, and you're on the trial, this is going to be a great cheat sheet or syllabus for you to lean on. Okay, because everything that you see here, Michael goes and executes in the training room every morning. So the idea is to give you more of an eyes wide open approach to what's going on, so you can absorb what's going on. So at the end of the trial, when you get an offering from CFRN, you can make a better decision on whether you want to pursue that path or not. Okay. Additionally, after that, we'll go into a live market. Okay, and the setup that I go over right now, we will apply right here inside DT Pro. Again, we're featuring the DT Pro platform because that's the platform I support. Right now, you're staring at the ES, the S&P Mini on a 4-tick range, and right here in front of you is the indicator set in action. So you're going to see me go over the rules, make some observations. You'll see me go inside, get my marker here, go inside this tower here. This is where we do our buying, and this is where we do our selling. Okay, so you're going to see me go inside there and execute. So I'm going to show you how to put trades on, how to manage them, and when to exit based on the CFRN methodology. Okay, so it'll be pretty cool. I'm going to do it in slow motion, so you'll get an opportunity to ask questions. I'm going to review it. If we execute something, I'm going to review the trades, and I encourage everyone, you should do that in your own trading plan. Win, lose, or draw, I would rewind the tape and say, all right, why did I take this? What's the setup there? Did I properly do the money management? I would get in the habit of doing that. It reinforces the rules. It'll help you. If you're struggling, hey, I had a losing trade. Did I follow the rules? Was everything set up there? All those little things I think will make a difference. All right, so I would strongly consider that. So again, brand new guys. Like I said, you'll get a good taste of what's going to happen during your trial. If you're a returning CFRN member, this is a great time for you. On a couple notes. One, you'll get to learn the personalities of the markets that we're trading. If you are spinning your wheels or you're not getting it, this is some extra time that you're taking the time to really advance your learning curve. Okay, so you guys get to ask questions. The also thing I'm going to do is I'm in the room every single morning. So what I'm going to do is I'm going to go over some common traps that people kind of fall into and kind of pull them out and show it and put them in full view. Okay, and my goal is for you to maybe grasp some of those pitfalls that people fall into and remember those things. So if you do see that, you can say, oh yeah, that's that thing Bert was talking about in that webinar on Thursday. I should look out for that. Okay, and I'll show you how to troubleshoot some of those things. Okay, so you'll hear me later hammer some of those downs, those things. All right, it's kind of the game plan for the next hour. But before I present, I have to go over the disclaimer. Let's put it in full view. I've been around for almost 25 years. I really don't like to throw this up there and say, take a look-see and shove it under the blanket. I'll take a few minutes to talk about it. Because it is a reality, and this disclaimer really is meant for the guys that are brand spanking new, guys that are just learning. Hey, what is this futures thing's all about? I heard good things about it. I'm getting some advertisements and emails, and, the advantages of leverage and all this other stuff. But it's a really a double-edged sword, because what this disclaimer really does, what it does say is that you could lose everything and some in your trading account if you don't have a trading plan, if you're not using stop losses, if you're not engaged in the market, if you're not trading, if you're not looking over your trading account, you're not in tune on what the news items might be. If you don't do those 5 or 6 really simple things, this disclaimer is going to hit you right in the gut. And like I said, I've been doing this for almost 25 years, and I've seen it happen. Okay, so again, this is a eyes wide open approach webinar. It starts with the disclaimer. It's not a great rosy way to start the webinar, but you know what? That's what I'm trying to do. That's the goal. Eyes wide open. It starts with this: the risks that are involved in trading. Okay. The flip side of that. Okay. With CFRN, if you're going down that path, that's why you're here. We do have a set of rules, right? There's 3 right in front of you. There's basically 4 or 5, but these are the backbone. These 3 rules are what you're going to basically learn, okay? And they apply in any market, okay? The rules don't change. It's the same rules no matter what market you're looking at, okay? So you have a trading plan, right? Number 2, every trade has a stop loss attached to it. Okay, it's an 8-tick stop stop loss. Okay, so you check that box off. You're on a 4-tick range chart. Okay, so you're looking at the market under a microscope. All right, so things are going to be moving kind of quickly. So yes, you have to be in front of the screens and engaged in the marketplace. So we check that box off. One of the rules that CFRN uses, we don't trade around reports. Okay, so that box is checked off. All right. So all those little warning flags that I just pointed out earlier about this disclaimer possibly kicking you right in the gut, that's kind of watered down. Okay, because you're doing a lot of those things when you are in the training room learning the CFRN methodology. Does it eliminate it altogether? Absolutely not. Okay, no one should tell you that. Okay, there's risk no matter what. Okay, even if you're putting stop losses in and you're in front of the screens, if something silly does come out, all right, there is a possibility that stop will not get executed. You'll still be in the market. There'll be some risk involved. But the good thing is, because you are engaged, you're in front of a platform, you're in front of the screens, you're in tune with what's going on with the news, at least you'll be in front of this tower here. Okay, like I said, this is where we do our buying and this is where we do our selling. But if that black swan event happens, you're going to be in front of a platform, be able to hit the exit at market and cancel button and get the heck out of Dodge. At that point, then you can take a deep breath and then say, okay, what the heck just happened? Okay, so like I said, not a great way to start the webinar, but again, we're talking about an eyes wide open approach, and it starts here. Okay, one little bit here too. Past performance is not necessarily indicative of future results. I have to state that, so I want to make sure I point that out. And then the next one is, and this is my last one, is my relationship with CFRN. Okay. I represent Daniel's Trading. Okay. Bert doesn't work for CFRN. CFRN doesn't work for Daniel's Trading. They're independent. They're a third party. They're an educator. It's their trading tools. It's their rules. It's their indicator set. Okay. There's no going back and forth between Daniel's Trading and CFRN. I support the platform. This is the platform that you're looking at. It's called DT Pro. Okay. So When you go through the trial, you'll get an invitation to download the platform. Okay, if you have trouble with downloading it, you'll contact me. Okay, I can troubleshoot the platform, the indicators. I'll show you how to do it. I've created some, little webinars on how to download that stuff. We can do one-on-one webinars just to get you up and running if we have to. If you decide, hey, I'm going to go down the CFRN path, I'm going to be a member, and now I need to open up a trading account. I handle the execution, the brokerage, and like I said, the platform. So that's kind of my department. I'm in the room every single morning, so I know the trade setup. That's why I can do the CFRN Thursday piece. So it's nice to, two things. Number one, if you have trouble, it's nice that you'll be able to call somebody and the person on the other end of the phone knows the platform, knows the methodology, probably knows your account number, and will know the rules that you're following. So if you do have trouble, you're going to have someone in your corner on the other end of the phone. And it's nice when you call the phone, when you pick up the phone, there's actually someone that picks it up. Okay, that's comforting for guys that are brand new, learning to trade. Okay, so you have someone in your corner. If you decide, hey, I'm going to be a member, you decide to go that path, the money that exchanges back and forth is between you and CFRN. It doesn't go through me, it's between you and them. Anything on their website, their videos, the Logic 247, concierge trade alerts, the swing trades, all that stuff. If you have trouble on their website, you can reach out to them directly. Okay, so there is a line in between the two of us. Okay, so I had to make that clear. Our relationship really started probably 10 years ago. It might be 10 years. I'm not even sure actually, but 10 years ago it was just radio with CFRN.net. And Dwayne was on the radio just talking markets. And somehow I ran into Dwayne and, he said, you know what, why don't you just come on the radio program and we'll talk markets and people have questions all the time and you can answer them and you can add some value to the radio program. So we did that for years. What was interesting is that inside the message box, I would see the people asking them, hey, can you show us how to trade? Can you show us? Can you show us? Can you show us? Show us what you're doing. Teach us how to do it. So he got together with Michael, and both of them are trade station developers, and basically they coded their indicator set inside DT Pro, the platform. So our platform reads easy language, so they were able to code it. So it's kind of like just happened to be at the right place at the right time, with the right platform, and the platform's free. So you can practice all you want. There's no additional fees involved in that. They encourage you to paper trade until you're comfortable and confident. And the indicators are real easy to input. Okay, so it's a few left clicks and you're good to go. Like I said, in the end, you have me as backup. So that's the story. That's how we got together, and so everyone's got their roles. Mike's in the training room in the morning from 8:30 to 10:30. I'm in the room as backup. I do the brokerage part of it. If someone decides to use the DT Pro route, I offer the CFRN Thursday class because I'm in the room every day and I see a lot and I know the methodology. Dwayne does the radio program still, and he's doing the swing trading, the concierge trade alerts, the Logic 247. He's doing that. And then you got Valerie, who's in the background, providing support. So yeah, teamwork. The teamwork's pretty good together. So that's a scoop. So So that's the disclaimers. Okay, 5-10 minutes worth. Like I said, I could just throw them up there and have you take a look, but 25 years, it's not worth it. I think everyone, especially if you're new, you got to know this stuff. Okay, that there's risk involved, and we don't take it lightly. Usually, the guys that come to get the CFRN, they've been beat up. They're numb to this disclaimer. They've been to this guy and that guy and this guy and this guy, so they're numb to this. They get this part. All right. Unfortunately, you have to go. Sometimes you have to lose some money and go down that path before you kind of stake your flag somewhere and say, hey, I'm going to really focus and learn this thing for once. So, all right, enough of that, right? All right, I'm going to go into the rules, okay? A side note, this is live, so my phones are going to ring. And what I'll end up doing is just putting on hold, hit the mute button, and then I might take a few minutes. It just depends on what's going on. Okay, so I just giving you a heads up ahead of time here. All right, here we go. First thing is the time frame. We are on a 4-tick range chart. So in the morning, all of Mike's charts, and you'll see them floating side by side by side. They're on a 4-tick range chart. So if you have a DT Pro, how do you get there? Well, chances are you're probably on a 30-minute if you're following Logic 247. You might be on a daily. The bottom line is you're probably on a time-based chart. Okay. What you want to do is see this little left-hand corner of the chart there. There's a little time-based little box here. There's a drop-down box. Left-click on it and select Custom. Select Range Bar and make that one look like a 4. Hit OK. You're staring at the S&P Mini on a 4-tick range chart. Okay. The height of each candle is 4 ticks in height. Okay. There's an advantage to that. When Michael does it in the morning, he uses the 4-tick range because it allows him to be proactive in placing orders. Okay. What does that mean? It means this. Okay. In the morning, you're going to hear Michael call out the highs and the lows of the current candle. Okay, the highs and the lows. Okay, what he's doing is this. When the rules apply. Okay, so hold on. When all the rules are in play. Okay, he's getting ready to place an order. Okay. He's going to place an order above the market. Here's the current market price right here. He's either going to be buying it on a stop or he's going to be selling it on the stop. Okay, depending on the direction of the trend. Okay, so if that market takes off, okay, he's going to be stopped into the trade. If it breaks down, he's going to be stopped on the trade, but on the way down. Okay, he's being proactive. You will see and hear this. Okay, when they first started the room, people were going, wait a minute, how did you get into that trade? You're faking it. What's up? And what he's doing, again, he's being proactive. Okay, he's placing an order on a stop. Okay, so just to give you advance notice. Okay, and he can do that because he knows the height of each candle. Okay, so you will see that, and you will hear that, and you will question that because I see it all the time. First trap that people fall into is instead of hitting this range bar selection, they'll go to tick bar. They'll make that 2 look like a 4. Watch the chart. Okay, if you're staring at anything like this, it's wrong. Okay, you fell into the first trap. It's the 4-tick range, and that little parentheses R, that R in parentheses there, that's the tip off. That lets you know that's a range bar. And again, the height of each candle is 4 ticks in height. Okay, so that was the long-winded explanation of the time frame. We're in a 4-tick range. The next thing is we're going to work on is the top portion of the chart, price action, okay? So here's some buzzwords. The red and blue line is referred to as the MA1. Nothing really fancy about it, it's just MA1. The green line is called the BBC. That is short for bullish and bearish cross, okay? That kind of leads us into step number one, okay? Together, when the MA1 is crossing the BBC, as it does there, and then MA1 is red, that is called a bearish cross. When the MA1 is blue and crossing the green line, that is a bullish cross. Okay, the one that's highlighted here is a bearish cross, and the reason for that, because the MA1 is red. Okay, this step one gets the ball rolling. Okay, that sets everything in motion. Okay, because when we get the bearish cross, we're looking for a selling opportunity. When we get the bullish cross, we're looking for a buying opportunity. This one here, again, is highlighted. It's a bearish cross, so we're going to be looking for shorting opportunities. Okay, so note that. Note that I didn't say get short, get long, get short. So we're looking for opportunities to get long and short, because that leads us into step number two. Okay, which is this. After the cross, there's our cross. The normal thing for the market to do is to gravitate toward the BBC or the green line. That's what we're looking for the market to do. Okay? We're looking for the market to touch the green line, do the normal thing, and then close in the direction of the trend. That is highlighted by this red arrow. They close in the direction of the trend. Okay, there is step number two. Okay, so we're looking for a touch, denoted by that candle, and a close in the direction of the trend, which is highlighted by that arrow and that candle. We know the trend is bearish because the MA1 is red, so what you're looking for is a red candle. What you're going to find out, when everything is the same color, that puts all of the probabilities in our corner. Okay, it stacks all the marbles in our side. Okay, there's no other filtering to do other than to go inside the tower, that dom, and take action. Okay, so step number two, the touch of the BBC and the down close. Okay. Excuse me. I'm gonna sip of water here. The twist to step number two. Sometimes the market has so much bullish or bearish momentum, it will not get to the BBC, that green line. So what you're going to learn, and what I'm going to labor over the next 45 minutes, is as soon as you get that cross, you're going to activate the trend line on our chart. This right here is our trend line. Here it is. We left click. Okay. You are going to learn and get in the habit of drawing trend lines. Okay. Because sometimes, here's a perfect example of it right here. Okay. Here's step number one. That is a bullish cross, right? So step number two, we're looking for a bullish opportunity. We're looking for a buying opportunity, right? We want to get long. Okay. The normal thing after the cross is for the market to do what? Gravitate toward the green line. Well, it's starting to do that. So what you're going to do is after the cross, you're going to activate your trend line and you're going to draw a trend line. Because if the market has so much momentum, it will not get here. And once it closes on the other side of the trend line, okay, step number two is you're locked and loaded in step number two. Okay, so let's go backwards here. Step number one, lights the match. It's a bearish cross. MA1 is red. We're looking for the market to do the normal thing. Just pull back to the BBC or the green line. While that's happening, we're drawing a trend line, just in case it doesn't get there. In this example, it does, and it does give us the down close, which is that candle here. So step two has been checked off. Okay. All right. Our eyes now gravitate toward the oscillator portion of the chart. Okay, it's called the slingshot. Okay, the trade exists in the slingshot. Okay, and I'm going to show you why. So I'm going to break the sucker down. The blue and red line is referred to as the cycle. Okay, remember I said earlier, and I said, hey, when everything is the same color, it kind of stacks the probability in our corner. That's what we would ideally like to see. Well, we have a bearish cross here, which is a red MA1. We should have a red candle. That's step number two. We then should be looking for the ideal setup, which is a red cycle, which you see here. Okay, so everything is the same color. That's good for the home team, especially if we're looking to get short. Okay, that's what you're looking for. All right. Now, what about this green line? Okay, what's up with that? Here's the scoop. The fact that this green line is pulling away, okay, what this is saying is this. The momentum on this in this market, the NASDAQ, it's bearish. It's got some bearish momentum. Okay, it's red. So that's, we're thinking bearish. It's got a nice slope to it, to the downside, right? So that's saying, hey, okay, we're in a downtrend in the NASDAQ on the 4-tick range. This green line pulling away along with this price action, which is normal, right? Normal thing is for the market to pull back to the BBC and fail. What this is saying is, hey, this action together, saying, look, this is just a pullback in this ongoing downtrend. This is an air pocket, okay? And this close here is another variable, or maybe another signal that says, you know what, man, maybe it's confirming that, and the price action is. So this pullback, along with this price action, is the divergence. You know what, you can't really see that, can you? It's the divergence or the separation that Michael is talking about in the training room. Okay, that's the price action along with the green line you're looking for. Now, why is it set up inside the slingshot, as I said earlier? Because when the divergence is present, what you expect to happen in the end is you expect the green line to ultimately come down and touch the cycle, just as you see here. And it's at that point, market action, price should make a new pivot low, and it's at this point here, you get the heck out of Dodge, recover our profit. Okay? So this is acting like a slingshot. It's like pulling the rubber band back. Okay, that's why it was referred to as a slingshot. The green line is being pulled away. Okay? So what happens is this green line gets into the cycle, and then guess what will happen? Okay? It's going to do this. Do with this. Pull away into the cycle until the momentum turns bullish. Okay? So we're looking at a blue line, and then we want the green line to be underneath it, creating bullish separation or bullish divergence. So what you end up doing, okay, is you end up selling this rally, selling this rally, selling this rally, buying this dip, buying this dip. And every time it goes into the cycle, we're covering the profit. That's the game plan. That's why the trade exists down here in the slingshot. Okay? The biggest thing, and it should be, and I'm going to highlight it right here, the number one thing that the market should be doing before you push any buttons is that the market should be trending. So if you have a piece of paper and you're taking notes, that should be on the top of the page. The market needs to be making lower lows in order for any of this to take place, or it better be making higher highs if you have bullish momentum. Okay? So that is the first thing that we're going to look for and talk about before we push any buttons in any market when we get in that live environment. Okay? Like I said, every trade has an 8-tick stop attached to it. So I'm brand new, don't know, I've never been here before. What does that mean? That means if you're trading the gold and the crude, you're risking $80 a contract if you're dead wrong. If it's the soybeans or maybe the S&P mini, that's $100. You're looking at the mini Dow, that's $40. Okay? In the end, okay, what you're going to learn is this. You're not learning to pick the top, and you're not learning to pick the bottom, and you're not going to learn to trade from point A to point Z. What you're going to learn to do is take a piece out of the middle. And as soon as you get into that trade, you're going to trail the stop, trail the stop, trail the stop, trail the stop until that green line gets into the cycle, and then you're going to cover your dough and get rid of it. Get the heck out of Dodge. All right? That is the game plan. So you're going to be scalping. Okay? That's what you're signing up for. You're signing up to be in front of the screens because you're on a 4-tick range chart. Okay? You're signing up to follow some rules. You have the discipline to do that. Okay? So that's the other thing. Because you are following rules and you're going to be in front of the screens, you have to learn the platform. You got to learn to, your eyes start here, and then they have to gravitate toward here, the DOM. You're going to have to learn how to buy and sell and how to move the stop and trail it. I'm going to show you how to do that, okay? So, you're going to learn this overnight? Nope. Not at all, okay? Over time, yes, you will, because it's the same setup. Doesn't matter what market we look at in the next 45 minutes, it's the same setup over and over and over and over and over again. And so at some point, it's like watching a rerun of a movie that you've seen a million times, okay? At some point, you know exactly what they're going to say before they say it. And that's what you're learning and training your eyes to do. And then once you get to that point, it's just it's an action. You just go inside the DOM and start executing. Okay? So that's why they ask you to get inside of a DOM. They ask you to get inside a simulator and practice first. Okay? So, yeah, it's not, emotionally, it's not the same. It's not real dough. I get that. I've been doing this forever. I got the gray hairs to show for it. All right? I get that. But as far as functionality, about looking at the chart and then moving into the DOM, okay? Yeah, that's something you have to learn, okay? So, that's the setup. Okay, so those guys that are brand new, you just broke that down. Now, we just have to put it into work here. Okay, so here we go. Let me close. Let me shut that down. I'm going to shut my live platform down. Okay, so stand by. Exit. All right, so I'm in demo mode. See that right there? All right. So we'll just start with the S&P mini. As I said earlier, the first thing, that number one thing that should be on your piece of paper is, are we trending? So the first habit I want you to do, the first thing I want you to do is get in the habit of hitting the zoom out button. Okay. A lot of times what happens is you'll get hypnotized by Michael's charts. They're blowing up pretty good, so you're looking at that thing under a pretty good microscope. Okay. So if you take a few minutes to zoom out, you'll get to see more of a landscape of what the market's doing. Okay. You'll be able to see what's going on to your left. Okay. This is going to tell you over here whether we're trending or not. Okay. So I look at this. Are we trending? Well, we've been making some lower lows, right? But we are trading a little bit sideways. And if you're not sure, see the dynamic support and resistance dots, how they're side by side? Okay. It's kind of telling you, you know what, maybe we're not going anywhere fast. All right. That's the first trap that people fall into. They get caught in a sideways market. They see this, okay, but they didn't see this, okay. But, you know, check this out. We have a bearish cross. MA1 is red, crossing the BBC. And we said the normal thing for the market to do is to gravitate and hit the BBC, the green line, right? And we did that. The market did the normal thing. It touched the BBC, but it also had the down close. That candle there. Do we have separation? We have a red cycle. That's good for the home team. And we have a line. We have that space, right? So why is the market screwing around here? Why is it not going down? Okay. It's that trap I was talking about. Okay. Are we trending? This says yes, because we've been making lower lows, right? Well, let me get my marker out. Lower lows. Okay. But if you take a few minutes to zoom out, zoom out, zoom out, I don't know. So I would say this. Number one, it should be trending. Number two, next order of business is hit the zoom out button. Why? Because that's what I told you to do. All right. And three, it's not easy and obvious. Okay? If it's not obvious that we're trending, if it's not easy and obvious, then don't push any buttons, period. You're going to be on a 4-tick range chart, and there'll be plenty of opportunities. Okay. So take your time. It's got to be easy and obvious. Okay. All right. So that said, we'll move on to a different market. We'll go to the crude oil. This one's pretty easy and obvious, right? Look, stair stepping up. I zoom out, stairs. I mean, this one, right, is easy and obvious. The normal thing for the market to do after the cross was back here. It's a blue bullish cross because the MA1 is blue. Normal thing for the market to do is pull back to the BBC. It did it. Okay, finally did it. And in the process, we are going to draw a trend line because that's what we are trained to do. That's it right there. Okay. Now, a couple things here that popped up, okay, is this. I said earlier, the highest probability setup is when everything is the same color. We got a blue bullish cross back here. We got a blue candle there right at the BBC, but this is red. Okay, you're going to run into, when that cycle is blue, it'll turn different color on you. If that happens, okay, here's the curveball. If the cycle turns color on you while you're drawing the trend line will be required. You will not only have to draw the trend line, but you'll need a close above the trend line before you can take any action. So this is perfect. We invite this. Okay, that's a great close. But the fact that this is red, requires a trend line to be drawn, but a close above the trend line, which is this candle here, is at step number 2 that's required. Okay. All right. So again, the normal thing for the market to do, gravitate toward the BBC. Because you're in CFRN Thursday, you are getting in the habit of drawing a trend line while that happens. And we did that. We do that for 2 reasons. Number one, we don't know if it'll get to the BBC like it did here, right? Never got there and took off. The other reason we do it is because if this thing turns blue and then turns a different color, a flag goes up and says, hey, this is watering down the probability. But 2, now the trend line is required, and it better close above the trend line before I take action. Okay? All right. And the other curveball to that, the fact that this is red, we know that's not good for the home team. The fact that's pitched down at a 45-degree angle, that is one of the biggest disqualifiers and a trap that people fall into. Okay, the fact that that's at a 45-degree angle against us says no trade. That's disqualifier number 1. The other disqualifier is we're not trending, right? We're trading back and forth here. Okay, that's the other disqualifier. All right, so I just threw a couple at you. And look, yeah, we did get some movement up, but in the end, what's happening to price action? It's going down. Okay. All right. So you might be looking at it now and go, holy smokes, we got a bearish cross here, right? So yeah, we do. We do have a bearish cross. So that bearish cross is right there. MA1 is red and crossing the BBC. The normal thing for the market to do is gravitate toward the BBC, and in the process, we're going to draw a trend line. Is that a touch? That's not necessarily a touch on that candle. Okay. But that's how the trend line is drawn. Do we have separation? Do we have a red cycle? Yes, we do. And the green line is being pulled away. So we have some divergence or separation. So the question is, are we trending? Okay. I would say right now, no. We've got a little bit of support here. This is kind of the first rung down. So I would say that's not one of those easy and obvious trades that we want to get involved in. But it has all the things I like, which is a red cycle, which is good for the home team. It's got a slope to it. It's got some separation. All right. I'm in my phone ring. All right, so hold on, okay? Okay. All right, so let's look for something else. Let's try to get our hands dirty a little bit here. This is the natural gas in October. Zoom out, zoom out, zoom out. Are we trending? No. Right? That one's easy and obvious. Back and forth, back and forth. Okay? We're not trending. That's a disqualifier. No trades. Okay? I'm not sure, Bert. Dynamic, support, and resistance side by side is your clue. Okay? So what I would observe is this. Once we start trading south with the green support dots, then maybe we get excited about getting short. Okay? Right now the natural gas is not trending, so stay away from it. Let's go back to the S&P Mini. Okay? I think this is where we left off earlier. It's going nowhere fast, and the reason is we're stuck in that range. Not surprising. Okay? Let's switch guns. Let's go to gold. Gold's been on the move. We're trading December gold. Okay? Notice the first thing that I do, zoom out, zoom out, zoom out. Okay? Right now, here's what I see. This is a big trap. Bearish cross. Normal thing for the market to do is pull back to the BBC. It does it there. Right? And in the process, we do the right thing. We draw the trend line. Is the trend line required? No, it's not. Why? Because the cycle is red. Okay. Zoom out, zoom out, zoom out. Here's the reason I would not gravitate toward that trade. Because look at the support we found looking left. You don't see that here. You say, ooh, this juicy trade. We broke dynamic support. Pull back to the BBC. We had a doji right at the BBC. Everything is looking great. The cycle is red. We got separation. But if you took a few moments to do this, man, the market really reacted off of support here. Okay. Now, you know what? Did it again. Okay. So again, you got short on that. You definitely got stopped out of it. Okay. And I think the reason is it didn't zoom out. If you took a few moments to do that and say, hey, you know what? Maybe it's stuck in a range, you would have avoided that stop out. So again, it's reinforcing the fact that you better start zooming out on your chart. And if you are spinning your wheels, that's one of the big traps that people fall into. Okay. So let's move on to the euro. Notice the first thing I do is zoom out. What's nice about it, we've been trending. We've been going lower and lower and lower. Okay. Here's a great example. I hate doing this after the fact, but you never know if it will get to the BBC. Okay. It doesn't. We drew the trend line. We got it closed below. We had separation. And what we expect to happen is the green line to get into the cycle. And the market should make a new pivot low, right? So there was an opportunity there. And then you're going to say, well, we had the same one here. It did the normal thing. But look at here. We want red. It's blue. So that's not good for the home team. But it's also at a 45-degree angle. Disqualifier. No trade. So then you're going to say, well, look, man, it went down. You told me not to take it. Absolutely. Okay. You'll have a few of those, and then you'll be tempted to go in there, and then you'll get stopped out. So more times than not, if this is a different color, and it's pitched at a 45-degree angle against you, which just means it's against the trend, a lot of times you'll get break-evens or stop-outs. So I'm just telling you ahead of time. Okay. All right. So let's. I'd like to get a trade on here. So let's. I'm going to show you at least how to do that. Yeah. Hold on.
Okay, that sounds good. All right. So we want to be. The thing is, we want to be long.
Going into the different markets to see if we can't get our hands dirty a little bit. Okay.
Okay. Sounds good. All right.
All right. Well, we'll keep fishing. Okay. Japanese yen. Okay. We pulled back to the BBC, but again, we don't even have any bearish divergence, so that's not on the table. Okay. The British pound got back to the BBC. Okay. We're going to have to make a new lower low. Okay, we're going to have to make a lower low before we can get short. The pound is off the table. The Swissy, definitely trending, right? There's one of those examples where it doesn't get to the BBC and fail. Here's another example. Gets to the BBC and fail. Not only that, the line is blue, so the trend line is required, and a close below the trend line is also required. So the close there, okay, lights the match, okay? But then, is it at a 45-degree angle or not? If you have to ask yourself the question, just don't even take the trade. It's not that easy and obvious category that we want to put ourselves into, okay? So I think in the training room, you're going to see Michael take these. Okay, he's a little bit forgiving on the angle of this thing, the slope of it. Okay, but just letting you know, if it's a different color, that's the takeaway. For you, that means two things. A trend line is required, and a close above or below the trend line is also required. But the ultimate thing is, you know what, that is watering down the probability. Okay, so that's your takeaway for the moment. All right, so that's Canadian. That's a hot mess sideways. Mexican peso. Notice the support and resistance dot sideways. I don't even have to hit the zoom out button to see that. And here's the Aussie dollar. Now, the Aussie dollar, we did break dynamic support. We did have that pullback. But actually, and that's got a good slope to Aussie has some decent, has a decent look to it. But let's find something we can sink our teeth in. I want to do. All right. So I'll tell you what. Here's the crude oil again. Okay. Now notice we do not have a higher high. We are double topping. Okay. But so I don't want you to touch anything. But if she pulls back and does the normal thing, we will execute it just to get in there and show you how to work the Dom. We have the bullish cross. Okay, so we have step number one in play. Okay. So the next thing we do, activate the trend line. We activate the trend line because we don't know if it'll get back to the BBC, and we need to draw the trend line as it gravitates toward that line. Okay. So we're just waiting. All right. So we're going to wait on standby here. In the meantime, this is where we do our buying and selling. That's the tower, right? So this button here, the Tinker Toy triangle. Okay, if you left click on that, the bottom of the DOM opens up. What's cool about it is, if you check buy stop and sell stop, and you right click over it, put factor in ticks, you see where it says buy stop and put factor in ticks, make that factor in 8, that's automatically going to put our stop loss in right behind us as soon as we get into it. Why 8 ticks? Because that's what the rules tell us. It's 8 tick stop. All right. All right. So here, so if that happens, all we have to do is left click, okay, and get in there. All right. All right. So let's see what happens. So we're looking for the pullback. I think when we get the pullback, okay, the green line will get underneath it, and then we'll have the bullish divergence, and we can put it all together. But for the moment, we're on standby. Okay.
We took them out. We're taking out all.
So let's see. Again, we're not trending because we haven't made a higher high. So that's why we're just watching in watch mode.
Yeah.
So for the moment, if we have a down close, our trend line is going to look like this. Okay. So notice the green line is getting underneath, which is good. We might have some separation. Now this is where Michael would get proactive. Okay. So here's what he would do. I'll follow along. If the low is 70 and the height of each candle is 4 ticks in height, then the high has to be 74. Okay. So you would have an order in buy stop at 56.75. So whatever the low for the high is, that's what you do. You add 5 or subtract 5. Now, that is the close above the trend line. Okay. You notice we're long. And there's our stop loss, 8 ticks away. So, rules of engagement, money management. If the market goes plus 4 ticks in our favor, we're going to move the stop to break even. Okay? And the way we do that is we just take our mouse, left click over that one, hold the left click down, and drag and release. Drag and release. That's all you have to do to move the stop. And in doing so, you're reducing your risk. Okay? All right, so for the moment, if we're dead wrong, that's an 8-tick stop attached to it. I told you don't do anything because we're not trending. So this kind of floats around here, well, I'm not going to be surprised. Okay? So let's see what happens. Do we have separation down here? No, we don't even have any separation. But again, the idea was just to get inside here and show you how to push some buttons. Okay? So this is good. This part is good. It's blue. It's got some slope to it. We don't have a lot of space in between here. Okay, the green line really isn't creating a lot of divergence or separation. So we got that. That's the other thing we don't have going for us. So if we get stopped out of this thing, I'm not going to be surprised. But gives us an opportunity to push some buttons here. Okay. So all I did was I'll show you again. All I did was left click. And by left clicking, okay, I'm setting a limit to go long. And that is our stop loss right behind us. Okay. Now, if you don't want this pop-up button, because over time that'll get a little distracting, go up to trading and trade confirmations and notifications, and you uncheck these boxes. That pop-up, the training wheels will disappear. Okay. Okay. So while that's happening, let's look for something that's a little bit more easy and obvious. Okay, the S&P, no surprise, floating around. Okay, go to the natural gas, floating around. The gold, floating around. Okay, the euro, kind of at a standstill. Okay, so we'll just watch paint dry here and see what this crude does in the next couple minutes here. I'll also throw this at you too while we're waiting for the crude to move. If you are a mini Dow junkie and, let me do this. I just did the Dow and I don't want you to touch this, okay? Because we had the pullback to the BBC, right? And there's my trend line, all right? I wanted to show you this because it moves, okay? So that's a good thing. But the other thing is, notice the slope of this. We have the separation. The green line is pulling away from the cycle here. And remember I said that's blue. That's not necessarily good for the home team, and it's got that slant to it. Okay. Again, that's that trap that you have to really keep an eye on. Okay. But I did the trade anyways, just so we can get our hands. I know the Dow moves, and so it's just moved 4 ticks in our favor. So notice how I just moved the stop to break even. Okay, I did that by sliding it. Left click, hold the button down, and move it to break even. Okay, and you notice we're flat. Okay, we just got stopped down. And that's normal when we see something like this. You'll get this action. You may also get this. Because what this is saying is the momentum's changing and we might be heading up. Okay, so that's the reason why I showed you that little bit. Okay, it had a lot of the, we had the cross here, we had to pull back to the BBC a couple times, we had the down close. Okay, but the reason I said that was that's a warning flag. It also gave me a chance to push some more buttons in the down. Okay, So again, that's that one that's not so easy and obvious. So we don't want to take those. Okay, let's go back to our crazy crude oil and see what that's doing. Okay, it's just kind of floating around here. Okay, so not much shaking there. All right. One point I wanted to go back to is if you are interested in trading the NASDAQ or the mini Russell, these markets are moving real quickly in this environment right now. So what you can do is instead of going on a 4-tick range chart, you can go to an 8-tick range chart. And the rules are still the same. The only difference is, if you notice at the bottom of my DOM, stops are not set at 8. The stops are set at 16 because the height of each candle now is 8 ticks. Okay? 8 ticks. All right, so we got some movement here, so let's see what's happening. So I'm going to go back to the 4-tick range. There's that Dow falling apart. And that's the one you get mad at me about, but that's the rules, and we're following the rules. Okay, majors got some support over here. That's why I'm zooming out. Okay. So we do have the bearish cross. The MN1 is red, crossing the BBC. Next order of business is activate the trend line. We're going to activate the trend line because we're expecting a normal thing to happen, which is pull back to the BBC. Are we trending? We are not trending because we are at a double bottom. So that's a disqualifier. And when we do this, that's some pretty major support below us, right? So we would not take the trade, but that's kind of the frame of mind that you want to be going through as you know, the ball starts rolling. And that starts with the bearish cross. Okay, this cross, whether it's bearish or bullish. Okay. That's our crazy crude. Just hanging out. Let's go back to the indices here. Okay. Hanging out over here because I know these guys will move. Okay. See how this thing is moving in chunks very fast. That's the NASDAQ. At least it's trending. It's making some lower lows. All right, let me look at a few others, and then if they're not moving, then we'll just call it quits. Because we are doing nothing. Again, get in the habit of zooming out. We're trading sideways in the gold. You don't see that here. Well, you might see that here because now we have a double top, but I want you to get in that habit. The euro. I'm gravitating toward the euro because Michael trades the euro in the morning, and that's a market that he stares at, so that's why I'm going over there. Nothing's happening there. Let me go to natural gas. We are starting to get underneath that dynamic support. So that might get us excited about getting short, but again, there doesn't seem to be a lot of energy in there right now, so not much is happening there either. So I think basically we're kind of at a standstill here for the rest of the afternoon. So here, for the moment, we'll hang out with the S&P here. If it gets back to the BBC and fails, we'll push another button. But again, I don't want you to touch anything because we are at support and we're not trending. And it looks like we got stopped out of that crude. Not surprising. Okay, so here we go. Dynamic support is printing. Okay. What that tells you is that we really want this thing to close underneath this green dot before we want to get short. So you know what? We'll see what happens. Let's see if it does the normal thing. Get back to the green line. If not, then we'll just call it quits. Yes, the cycle is red. Okay. I prefer this has a slope to it. This doesn't. Okay. Right. So the question is, we do have space here. Yep, the green line is pulling away. So we have the separation, but the cycle is a little flat here, right? Not ideal. This is more ideal. Here's what you kind of get excited about. That and that. Right? A 45-degree angle up or down. Same reasons why we don't take trades against this, right? This tells us it's got a lot of momentum. This just tells us we're pretty flat. Okay, where we stand right now. Okay, this flat market action. So you know what? We might just lay here. So we'll just call it quits. All right. So of course we get a little uptrend here. So let's see. All right, so we really have to close below dynamic support before we think about getting short the ES. Okay, so that wraps it up. So again, we went over the trade rules. This is a great cheat sheet or syllabus for you to lean on if you're brand new. And then we went inside the live market environment, and really there wasn't much to talk or brag about. Okay. The takeaways, especially if you are a CFRN member and you're spinning your wheels, okay, get in the habit of zooming out to see if you're trending, because a lot of you guys are getting hypnotized by this picture, but you're not seeing maybe that picture. And so that might be the reason why you're getting stopped down in some trades. The other thing is, too, is you have to keep an eye on the cycle. Okay, if it turns a different color on you, okay, we know that waters down the probability, but if it starts curling up at a 45-degree angle or anything that resembles that, then no trade. It has to be easy and obvious. Okay, and the other takeaway would be after the cross, okay, there's a bearish cross, there's a bullish cross, and there's a bearish cross. Activate the trend line right away. Get in the habit of doing that. Get in the habit of drawing trend lines. Okay? Even if you're in the beginning stages and you're just learning, get in the habit of doing it. Okay? Because you never know, A, it'll get to the BBC, and B, this cycle turns color on you, and that trend line is required. Okay? That's it. And then we got inside the DOM and screwed around a little bit with it. But like I said, there wasn't really anything easy and obvious this afternoon. So that's why I had to keep your hand off the mouse. So that wraps it up. So I'll see you in the morning, and we do this every Thursday for an hour. Come with questions. It'll be recorded. Throw it out on YouTube. And yeah, you could always ask questions. Just call or email me.